Wall Street is having a rough ride. U.S. stocks getting hammered today. The Dow, the Nasdaq, and the S&P 500 all down more than 2% on the day. The S&P on track for its lowest close in nearly 2 years. Moneywatch reporter Jill Wagner is at the stock exchange now. Jill, what's happening?
Well, Contessa, for anybody who was expecting to come into work today, hopefully they would make up some of the losses that we saw Friday. No such luck, as you were saying. The Dow, the Nasdaq, the S&P all way down. There are a lot of factors here. For one, oil prices are down, the tech sector is getting slammed, and we're also seeing banks in Europe getting hit. And I'm here now with Peter Tuchman. He's with Quattro Securities. So, Peter, mostly it's Europe, right, today?
You know what? There's a lot of things. We had Friday, market sold off on some tech sell-off with Amazon, Facebook, profit-taking, LinkedIn and data got hurt badly. And, we've been trading in an oil trade for the last couple of weeks, basically even since the beginning of January. And then last week we saw that the weakness in the European banks was really having a heavy effect on the market. We were trading inversely, oil was going back up, and we were still selling off. So that's when you have to sort of start analyzing, well, where is this sell-off coming from? Weakness in European banks was the problem. That with some tech sell-off on Friday. We came in this morning, and at 4 a.m., there was some rumors about some Italian bank defaults. There was questions about European banks in general, and a weakness over the whole sector. There was a big sell-off in Europe at 4 a.m. That's what we came into this morning, and obviously it's escalated further.
It feels like almost every day we see a swing, triple digits. Unfortunately, it's been mostly to the downside recently.
Correct.
Is this the new normal? You've been trading for 30 years. You've told me it never used to really be like this.
You know what? We are seeing, whether it's a matter of we're part of this information highway, where we're getting a lot of information quickly, so we really know a lot of things are not trickling out news-wise. So we've got all this, and we've got the press that's churning information, whether it's Fed, whether it's oil, whether it's gold, whether it's weakness in the economy in general, whether it's Europe, whether it's banks. We are getting a barrage of information on a daily basis, and the market is reacting to it. We are net, yes, we've been selling off since January 1st, but we are still up net since 2009. We've seen a huge rally. So these moves, whether it's just general volatility, whether it's information, whether it's overreaction or just reaction to what's going on. We saw LinkedIn on Friday, right? Poor earnings, poor guidance. $200 and something stock at one point was down to almost $100. So these are big reactions. Big bets are being made and big volatility.
And you were saying it happens in an instant. Someone writes a tweet, and all of a sudden, a tweet about a company, and all of a sudden it starts trading dramatically one way or the other.
And on top of it, we've got some computer trading. We've got people who are involved on the buy side and sell side with algorithms that react to tweets, react to selling or buying, and it tends to exacerbate the sell-offs or rallies, as it were.
All right, well, Peter, thank you so much. A couple more hours left for the trading day now. And
we are retesting today's lows. Oil is still down. Gold is rallying, which serves that weird inverse trade. Banks are still weak. Goldman Sachs is down on the day. We'll see what happens. Anything could happen from here.
Yeah, it's been a wild ride so far this year, and it doesn't seem to be getting any better.
Yep, every day is a wild ride.
So, Contessa, there you have it. For everyone who was hoping February might be a little bit better than January for the markets, at this point, no such luck. Peter, thank you very much.
Tomorrow's another day.
Back to you.
Thank you.
We have to have patience to see how the rest of February plays out. That's what the investors are trying to tell us. But, patience is hard to come by when you're watching this roller coaster ride.
Yeah, it could be a little bit painful.
Yeah. Jill, thanks.